The Federal Reserve conducts meetings in secret. All central banks do. During the financial crisis, there were countless closed-door meetings where they decided who would get bailouts and who would be left to the vultures. In time, we will find out the truth. The collusion we have is never fully disclosed, but we must put the pieces of this puzzle together to understand the truth. And that's why you came here for the truth, so let me unveil that for you. Today we're going to look at the Fed, we're going to look at the debt that has been accumulated, and so much more. Let's begin. This is an excellent report, so interesting that I wanted to make it the primary topic of today's video. A new study has found a jump in New York City taxi cab activity between the Federal Reserve Bank of New York and major Wall Street banks. And that's around the time of central bank policy meetings. We know that the Fed and the Wall Street banks are in complete collusion. We already have all that data. We know that. The revolving door we have been tracking now for so long goes back all the way back to the dawn of time, and we know this to be the case. But what about what happens behind closed doors? There's only such limited information that we will ever get. So what happens during the FOMC meetings, we get those years later. We're not going to get that information that day or that week. We just don't know. So we do what we can with the little pieces that are being brought out in the mainstream media. But this report here is interesting because it uses anecdotal evidence. So the issue here is that there's these meetings that are happening, and it just so happens that we have a correlation taking place. All right. The study's author says that the findings suggest an increase in informal communications between the Fed employees and individuals in the private sector could be occurring. Remember, it is not a fact that he's presenting. He's just saying, isn't this interesting? And that's what I like to look at, because if you're looking for the Fed to say, we sit behind closed doors and we make secret meetings and we're the Bilderberg group and we are all gathering here to make sure that everybody stays in their compartmentalized fashion, and we want to be the 1% and you're the 99%, and we are in fact trying to usher in a new world currency and all this business, you rarely get anything close to that, any admissions. And when they do have those admissions, they always find a way to backtrack or make it look like they didn't say that, or say you were taking out of context. So we have to put pieces together. That's the only way it's going to work. All right. The study was conducted by University of Chicago Booth School of Business PhD candidate David Feiner. All right. So his paper was interesting, and this is what happens here. Mr. Feiner used government-provided GPS coordinates, vehicle information, and other data to track taxi traffic between the addresses of the New York Fed and major banks. His research pointed to increased traffic between the destinations around lunch and late evening hours, which suggested informal meetings were taking place. Mr. Feiner wrote in his paper he found elevated numbers of rides around the FOMC, Federal Open Market Committee meetings, with most of them coming after the gathering. Isn't that so interesting? And as I said, it's anecdotal evidence. It's just pointing the finger, saying, hey, look at that. They have some charts that I saw here that actually show the locations on a map and everything. That was interesting. I won't show you that today, but if you want to take a look at the actual report itself, you can do so. It's here at chicagobooth.edu. The link is, of course, in the description under sources. What insights do taxi rides offer into Federal Reserve leakage? So what we know that has been going on for quite some time is that there is a revolving door, and the central bank and the commercial banks work hand in hand. Look at the LIBOR rate. It literally has the first part of that word, the first syllable, lie, right in it. They decide what the rates will be at any time. There's no free market. Get that out of your head. In this paper, I employ anonymous New York City yellow taxi records to infer variation in interaction between insiders of the Fed and insiders of major commercial banks around FOMC meetings. So it goes on here. Essentially what's happening here is the FOMC meeting happens and you could see the taxi rides that go from this area to where the other commercial banks are located at that time. And it goes into more detail. But isn't that interesting? I never would have thought of something like this. But it's just something to me that really adds to the list of information that we already have. Do I need to know that there is collusion going on when we had the Fed's $16 trillion bailout that took place, and yet not a single person was in trouble? Nothing was done about it, and this amount was never even added to their balance sheet. They found it. Look, you printed $16 trillion. And nothing was done. Absolutely nothing. They did an audit. It was a limited audit. And in that audit came up, you lied to us. You printed $16 trillion. And what's going to happen now? Nothing at all. Absolutely nothing. All of these commercial banks, all of these institutions, and everything else all across the world received money from the Federal Reserve. And yet, nothing was done about it. And I got to give credit here. Bernie Sanders was on that. Then we have the LIBOR OIS, and I'll get into what that is in a moment. You could see how it's been pushed up to rates that we have not seen since early 2012. So remember I mentioned the LIBOR, where this is a little different here. Now the OIS, meanwhile, represents a given country's central bank rate over the course of a certain period. In the US, that's the Fed funds rate, the key interest rate controlled by the Fed. If a commercial bank or corporation wants to convert from variable interest to fixed interest payments or vice versa, it could swap interest obligations with a counterparty. For example, a US entity may decide to exchange a floating rate, the Fed funds effective rate, for a fixed one, the OIS rate. In the last 10 years, there's been a market shift towards OIS for certain derivative transactions. And it goes on, okay? It's just interesting that something like this is happening right now. The market seemingly doing well, everything's looking fine. We don't have an issue to worry about anytime soon because the central banks are there to backstop any problem. Interest rates are still very low and they're cautious to increase them. I would say it's pretty much status quo the way things are. Yet the OIS has increased dramatically. It might be a little blurry. I'll move on here. Just wanted to touch on the fact that total global debt in all sectors has been rising. Now, this chart here shows you 217. What is that? Is that million? Is that billion? No, it's trillion. But actually, the more recent statistic shows 200, that's a record, of course, doesn't surprise me, $233 trillion in the third quarter of 2017. So we already know it's higher than that. And in fact, that was $16 trillion higher from the end of 2016. Just coincidence, 16 trillion with the Fed. But what we have here is a ridiculous, impossible level of debt that's being added. And you look at here, private non-financial sector debt hit an all-time high in Canada, France, Hong Kong, South Korea, Switzerland, and Turkey. People are so indebted right now, and they have no idea how to pull away at all of this stimulus, no matter which country it's in, no matter how they've done it, and somehow get the economy to continue moving. It's really, really a perfect storm that's being built. U.S. private debt to GDP. And they're talking about the fact that, hey, there's been this credit crunch. Don't worry about it. Well, first of all, I'm not believing it. But anyway, just look over the longer term. I mean, it just shows you. Debt to GDP ratios. Pick a country and you will see it was worse today than it was a few decades ago. I wanted to also know one in particular, China. They have increased dramatically over these years since financial crisis time frame. They have skyrocketed and elevated faster than anyone. I mean, just look at this. You can see this practically immediate rise in their debt to GDP ratio. They just said, look, we're going to destroy our currency. It doesn't matter. Let's do it. Everybody else is printing. Everybody else is going to engage in stimulus measures. We need to do this. GDP growth is turning down. And this is as of Q3 2017, and we could see that in the US, we see it in the Eurozone and Japan as well. I'll show you one more, in fact, in a second. But look at this. GDP growth, we are looking at equities rising so fast. And I've shown you this before. Look at equity prices, how far they've risen, and look at the GDP. So you look at the GDP over, let's say, the last even 10 years. GDP has been growing. But it's growing at a rate that is, let's say, I don't want to put this word on it, but let's call it normal. Put some quotes around that. And then you look at the asset prices in which they have risen in a historic sense. It's completely out of whack. The two usually move together, you know, and there's some variance that goes back and forth, but ultimately in recent times, it has gone far beyond that. It's gone parabolic, and it's, you know, it's all in outer space right now. South Korea GDP exports quarter over quarter. It hasn't been this bad. I believe the number I remember was 33 years looking back at it. Now, if we hit, this is just one quarter, but of course, just previous to this all of a sudden good quarter, if it goes again into the negative, I think we have a big issue on our hands for them. So let's keep an eye on that. The walking debt, resolving China's zombie firms, better resource allocation from resolving China's weak firms can raise growth potential. I love the way they make this seem here. We're talking about the IMFs, and they have these rosy pictures, but look, take a look at all of these. They're suggesting, don't worry, we're going to be able to make it happen, but all you got to do is remove the zombies. We got to just reduce overcapacity. No worries. Reforming the state-owned enterprises. Yeah, don't worry. And we're going to have this maximum growth. We'll give it up. That's it. All right. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel. We are heading towards 100,000 subscribers. I hope that you will help me out with that by hitting this like button, by hitting that subscribe button, joining me here. I do videos every single day, and I'm always bringing out new good information, so don't hesitate to hit that button. Last but not least, if you found the video informative, I know you'll find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can flip through these books at Amazon. There are links in the description below. Take care.